Hello and welcome to Trading Basics, a series of short videos designed to make you a better trader. But if you're thinking about trading, the first thing you have to do is you have to pick a market. I mean, what are you going to, you can trade a variety of things. There's tons of things out there that you can get involved in. But picking the right market is going to be one of the most important decisions for you. It pays to specialize a little bit because markets definitely have a feel to them. And if you can get that feel as you gain experience in a particular market, you become that much better. So picking a market is important. So where did I start? What's my background, right? Well, if you don't know now, my name is Martin Tillier, and I currently write about markets for NASDAQ. I am the chief trader at Oilprice.com. I trade. I teach people how to trade. Trading's been my life for my entire working life, just about. I started as a youngster in the foreign exchange market, in a dealing room, just like this, surrounded by screens and screaming people. Great fun. Forex was my background, but Forex isn't what I trade now. There are reasons for that. The Forex market these days is almost entirely dominated by the algos, by computer-driven trading. That's not my kind of market. They're in all markets, but when they're as dominant as they are in Forex right now, it's tough to not be in this environment, to not be surrounded by screens and sitting in a trading room where you've got every advantage of information and everything else, and still somehow give yourself an edge, still somehow make some money. I realized that when I left the market. So I wanted to use my trading experience, my knowledge, everything I've been taught, but I didn't want to stay in Forex because having been on the inside, I could see what a huge advantage those guys were at. So I dabbled in it for a little while, and then I proved myself right, and I thought, you know what, I better find something. And I cast around, and I settled on energy. A couple of reasons. Firstly, the commodities markets, which are what really drive energy, behave in a very similar way to foreign exchange. So I felt like I had some familiarity with the markets. That was part of it, but it was also I was looking around for something dynamic, a market where opinions differed all of the time, which they always do in markets, but where they were very strong. And look at the situation in energy right now, okay? Renewable energy is all the vogue, right? All wind, solar, battery-powered cars, all this stuff, great. And the use of renewables is increasing. So there are people who think that that's the current story, that oil's dead, especially given that fracking increased supply. And, so we have this supposed glut of oil in the world. But industrialization continues apace in the developing nations. Development, industrialization, the world's population, they're all growing faster than the supply of energy. So there's still a growing demand for oil. And the people that understand that believe that that is the current story. So you have conflicting opinions. And when you have conflicting opinions in something that's priced, in something that involves money, what do you get? You get movement. Let me tell you the number one thing about markets. For a trader who knows what they're doing, movement equals money, cash, dollars in your pocket, an expanding bank account. But you have to know what you're doing. You can't just jump in and think, oh, well, I'll just start trading and here we go. So that's why I wanted to lay this out for you. Just a basic thing of we're going to go through some mistakes to avoid. We're going to go through some basic techniques. We're going to go through a few things during this course of videos that you need to know if you're even considering starting. For now, let's focus on energy. Energy is in the headlines, right? And that means it attracts trades, sometimes from people who aren't necessarily specialists in the market, and that leads to exaggerated moves. And those exaggerated moves lead to opportunities. One of the basic things that you come to understand about markets very, very quickly when you sit in a dealing room at a trading desk is that traders overreact. They're like sports show hosts. They overreact to everything. Greatest quarterback ever, greatest footballer ever, whatever. That's the same way with financial markets, the same way traders behave. They are news-driven. And when you're news-driven, there is a tendency to overreact to that news, to see it as maybe more significant than it is. So if you're going to be successful, you need to look for the opportunities that brings. I mean, here's an example of a recent one that I gave to my Energy Trader team subscribers. Right, Petrobras, the Brazilian oil company, was under enormous pressure. Oil was still falling. After finding a bottom, it had started falling again. The real was collapsing. Everybody was talking as if Petrobras was basically going under. Well, of course it wasn't going under. It's a state-run oil company. They're not going to let it go under, really. Highly unlikely to. And oil had found a base. So the move that we saw was exaggerated down. Right? We spotted that. On September the 24th of 2015, I said to my subscribers, here you go. Here is the level. We bought in at about somewhere around about 380, depending on how quickly they got my email and whether they watched the webinar that I brought it up in at the time that I gave it, but somewhere around there. In fact, those who were a little bit late probably got a little bit better, hit closer to the low around about 370. And when we did that, we set some parameters, and one of them was roughly to sell if we got to the next point of real resistance. That came pretty quickly. Less than 2 weeks later, through email, I told those subscribers to sell at about 570, 575. That's the kind of movement that you can get in energy markets. The result of that trade, approximately a 50% profit in 2 weeks. I don't think any of you think that's bad. That's the kind of thing you're probably looking for if you're thinking of trading. And let me make something clear here. We didn't use any fancy complex option strategies. We didn't have an enormous amount of risk on the table. We just took advantage of the market as it is. So if it's that volatile, I can almost hear you say, well, isn't that dangerous? You know, I mean, if it can go up that quickly, it could have gone down that quickly too. Volatility isn't dangerous for people who know how to deal with it. And that's what I teach people. I teach people proven analysis methods and trading techniques that I've adapted from the world's largest market. Forex is the world's largest market, trillions and trillions and trillions of dollars a day. It's the largest market, and yet almost every Forex dealing room for the thousands of bank branches around the world makes money. Why do they make money? Because they know what they're doing. That's where I was taught. And the lessons that I was taught there apply to markets in general. One of the most basic things, if you want to control that volatility, or if you're scared of that volatility, avoid really illiquid securities. There's a lot to be said for some of the, penny stock trading techniques that offer potentially huge rewards, but they also come along with big risk. I'm not talking about that. I'm talking about a controlled risk environment. I'm talking about a situation where you know going in approximately what your potential losses are, and you set it up so that you stand to make more money than you can lose on almost every trade. That's not hard to do if you know what you're doing. The hard thing, the thing that comes with experience, and the thing I try and teach my subscribers in the Energy Trader team is how to decide what those levels are. That's where the trick is. But that is the product of a system as well. There's no magic system to trading. There's no magic trading in a box thing. But how you set up your trades, that needs to be done according to a system that has proven to work over the years. All right, so we've established that energy is probably a good market to be in, or at least hopefully I have. I think it is. It moves around. It offers some very, very liquid securities. There's plenty of movement in the underlying thing that controls the price, which is the commodity itself right now. There's uncertainty as to which direction it's going to go. Most people feel, we've seen a 60-some% drop since 2014 to the beginning of 2015. All well and good. Some of you may be thinking, well, if oil's going to recover at some point, which I assume it is because there's volatility in this market, why not just buy and hold ExxonMobil or ConocoPhillips or Chevron or somebody like that, where you've got, limited risk supposedly, and you can take advantage of that upside? For two reasons. Firstly, there's no guarantee that from where you come into the market, the next move will be up. It could be down. And secondly, even if it is, there are no straight line moves, which makes running and holding a position like that difficult for most people to do. When you see it start to drop again, you start to think, oh, I want to take a profit on this, and you get out before you should. Trading actively, as long as you do it in a disciplined way and you do it in the way that I teach people, means that you can profit in both up and down markets. The market doesn't have to be going up for you to make money. You can do it either way. What that means, that gives you control. If you're just going to buy and hold something, you're passing that control of your money and your position essentially to Wall Street, to the trader, to the floor traders. You're not controlling it yourself. I like to be in control, particularly of my own money. So I'd rather trade than just sit and hope. So the next video, I'm going to tell you why so many of those experts tell you not to trade actively and why they're wrong, quite frankly. I'm sure you've heard them, right? Oh, you shouldn't do that because you could lose money. Well, yeah, great. Overall, in the series as we go on, I'm going to show you how to put the odds in your favor, trading energy, or for that matter, any other market, so that you can stay in control of your own money and stay in control of your own destiny. We're going to start, though, next time with busting some really big myths that you've probably heard and explaining why active trading doesn't have to be a bad thing, doesn't have to be dangerous. It's information you can't afford to miss, so I'll see you then.